What's going on, guys? Welcome to our London, New York live trading session. So we're going to be focusing on the ECB's rate decision that's going to happen pretty much in about 10 minutes, right? So one of the outcomes, it's fully priced in that the ECB is going to cut rates by 25 basis points pretty much. I believe is priced in at 23. So that means that they're just going to do a 0.25% rate cut. So it's already priced in. So if we get the 25, that could spike the algorithms to give us euro weakness right off the bat. But there also has been talks with a possible pause, right? I am more leaning towards them cutting rates by 25, and then we're going to focus on the press conference and seeing what forward guidance it's going to be. All right, just to talk about the no-brainer direction. If we see if they cut rates by 50, that's an automatic no-brainer sells, right? If we see that they pause rates, that's going to increase the strength of the euro currency, which should be a no-brainer if they do a pause, because that's going to surprise the whole markets if they do a pause. It's highly unlikely, but there's been talks that it could be a possibility that they might pause rates today. If we see a pause, that's going to be the trade for the day. We're going to see a ton of euro strength, and that's pretty much all we're going to be looking to take advantage of. But if we see that they do a cut by 25 basis points, we can take advantage of that initial weakness in euro. But the markets may wait till the press conference to get forward guidance. And that is going to take at least like probably like another 45 minutes or an hour, right? We're going to pay attention to the headlines, obviously, together, but there's just a higher chance that we might have to wait until she actually goes through that Q&A just so that we could get an idea on their expectations, just from their future expectations on rates. So we got about 10 minutes. So I'm going to be looking at Euro. I still, from London session, I think Euro JPY would be the best bet because we do have US data coming at 8:30 and we have jobless claims, right? And it's just a possibility that we're going to see that number take a hit because of the past things that's been happening in the US that led to people losing jobs, like the hurricanes, for an example. So it's a possibility that jobless claims may tick up again, like it did last week, as a surprise, which can weaken the dollar. So that's the only reason why I probably think that Euro USD probably won't be a good idea. Maybe focusing on Euro Pound and Euro JPY for this event, or Euro AUD. Even GB, like Euro Pound, Euro Pound, Euro Pound, Euro JPY, and Euro AUD. I think those could be the best pairs to trade. But I'm gonna look at Euro JPY, see if we get an opportunity there. That's gonna be the focus. So again, the dovish outlook. If we get a 25 basis point cut, but we need to see forward guidance that is signaling more downside in inflation. We want to see if they're talking about more downside in growth, any growth concerns. That data, PMI data, I believe, for the euro has been significantly strong, and that's one of the reasons why. There was just some outliers out there saying that there's a possibility it could be a pause because of growth. But Germany, I believe Germany is dealing with a recession. So if that's the case, that's another initial reason for them to want to cut rates, right? So if we see concerns about growth, concerns that that they're expecting GDP to continue to push lower, and they're having more confidence that inflation is coming down, that is the forward guidance that we need for more of a dovish outlook. All right. That's exactly what we're going to want to take advantage of. So if we get that dovish look, Euro AUD sells to me would be the best bet, because we just had a strong Australia data print coming out. And I think that would be one of the best options, just like from London or taking advantage of Euro JPY. I will look at those two opportunities. Euro pound is already taking off, but I would just look at those two events for a good trade. All right. So if we want to look again, a hawkish scenario, even if we get a 25 basis point cut, still it's going to depend on forward guidance. And if they cut and we look at the statements, right, and they're talking that inflation is still looking to stay sticky, inflation is the rise. If they're concerning that growth is still a concern, right? Growth is still on the verge of recovering, or growth is looking to get stronger. Any positivity remaining in the economy is going to lead to more of a stronger euro, even though if they do a cut. So if they remain data dependent, right? Data dependent shows uncertainty. That could cause euro strength. So when it comes to the 25 basis point cut, it's not just that alone. We need to focus on the actual statement, but I'm more leaning towards if I'm more leaning towards only taking buys if they leave rates the same, right? So if it stays at a 3.7, leave rate, if they leave it at 3.7, we're going to be looking for buys on euro right away. If they cut rates, that can initially drop euro, but you have to be concerned about the statements to the left about what they say about inflation and growth, right? Because initially the sales may happen right where we see the number. When it hit a 3.4, we're probably going to see those sales drop significantly. But it's a possibility that it can recover depending on the comments, right? So if they cut rates, that would be the initial reaction. But if the comments say anything positive about growth, we're going to see that drop recover and euro could gain strength. All right. So you have to be prepared for that if you want to take trades initially off the reaction. Because, like, literally, the algorithms is definitely going to spike in and give that euro that weakness. But then once they dissect the information coming out from the data, and if the forward guidance shows anything hawkish, we're going to see the euro start gaining strength. It doesn't mean we take buys. I think the best bet is to wait for the press conference. All right. And then after that, we're going to have jobless claims along with retail sales. And and we also going to, jobless claims, retail sales. And then we're going to have Fed, Fed data. Let me just try to put this down a little more. Yeah, 8:45 is the press conference. So this is what we're gonna have afterwards too. You don't have to trade this if you don't want to. We've been having a really cool, like, smooth week so far. If you want to wait till US data, there's three different prints coming out. So I still think the important one is going to be jobless claims. But, like, again, you want to see everything come out together. That's why I really don't want to mess with the dollar, because it's a possibility that jobless claims may take a hit. But what happens if we get strong Fed, Philly Fed, and strong retail sales data, right? Because the jobless claims is most likely taking a hit because due to the hurricane, people filing for unemployment, filing jobless, right? So it's a possibility we're going to see a downside in those numbers. But if we see everything come in red, right, that's definitely going to weaken the dollar, but it can also weaken equities, because this is only temporary because of the hurricanes, or this is going to be a start of seeing bad growth in the economy, right? So this could be the start. This could be the change around. So what I would look for is to see if we get red across the board, and then we could see if that could actually hurt equities for today, and also see if it could drop the dollar, because that would definitely put the Feds being back restrictive. So USD JPY would probably be one of the best options. But if we see that jobless claims come in lower and we see good growth, we see good job data, good data across the board, that would be an addition for Euro USD pushing lower, right? So I will look at those pairs just in case. But what I'm gonna focus on is Euro JPY. and Euro AUD. I definitely want to take Euro AUD lower. I would love for that because it's just, it's a, I like trading the divergence of central banks. One central bank that's weaker, one central bank that's stronger. I think that would be the best bet. So Euro JPY, if we start breaking below structure, Euro pound is already taken off. Can't really even yeah, like can't even really focus on that now. But again, if they cut rates, I'll help guide you guys. We're gonna look at the charts to the left, see what if we could get an actual income. Like everybody's good. You just put a one if it makes sense. So what I want to anticipate is if they cut rates, it's already expected. So it's a possibility that we can see weakness, but it may not last long, because it's already anticipated. What we need to pay attention to is the forward guidance. There's something that I would uh I would be cautious about is they even if they do cut rates by 25, it's like 97% priced in. So it's already expected, but it should weaken euro. But if we get a cut along with dovish forward guidance, then that should help more downside, meaning if they're expecting more additional rate cuts to happen in the future, if they're expecting inflation to continue to decline, if they're expecting growth to actually show some hurt, like the economy is moving to the downside. We don't know the language they're going to use, but at least you can understand it from a broad perspective. If they talk bad about the economy, talk about downside of inflation, that would, with a rate cut, that would most likely help euro sales. If we get a rate cut and they talk positive about the economy and they showing concerns that inflation is still on the rise, that will, even though we have a cut, that will still give euro strength, and that's not going to be a good option. I put in a central banks tab, but I would update it after this so that you can all get a good read. All right, see, like most of you are good at 2:30. I don't know what time you were. Well, it's US data, so if you mean 8:30 my time, it's like, I'm not gonna focus on CAD data. Like so, if yeah, I don't see no CAD data here, but it's important for um euro and dollar. So if you're trading USD, you're focusing on a dollar data, like you're focusing on US data, and whatever that signals, that will be the direction for the dollar, and most likely CAD will follow. But that's the problem is that CAD does follow the dollar, so that's the problem. But yeah, like what I would look for is again, if you get red across the board for the US, that should weaken the dollar. If it all comes in green, that should strengthen the dollar. But if I will say initial jobless claims will probably be one of the main focus for this event. And the only problem is just how the markets is going to view it. Is it going to be a temporary problem, or are they expecting this to actually be the beginning of some downside in growth? Right. So I think that's going to be how are we going to dissect that? I think it just depends on watching the markets when the data comes out. All right. And I think that it's going to be pretty tough because it's hard to when you have jobs, then you have growth data, and then you have retail sales all in one. So it's hard. And then what happens if they all come in mixed? You know what I'm saying? So it's very hard to determine that because like even if we get a big miss in jobless claims and the markets react with fear, it's like, okay, what do you do with gold, right? Do you buy gold as a safe haven? But what happens if the dollar continues to drop with the yield? Like, like then you buy gold. But what happens if the data comes out stronger? Would gold sell off? So what happens if now these geopolitical tensions arise again? So there's a lot of shit going on in the markets. So that's why I typically would want to take the easiest trade. I think just red across the board would probably be the best option. Like if you get bad jobless claims, bad Philly Fed, bad retail sales, it's less of a guessing game. So you would prefer to see red across the board. That would definitely help, and I think it would help equities push lower too. That would be a good sign. But if we get strong data across the board, that will surprise jobless claims because they're expecting it to be a big miss. So dollar strength would definitely be an amazing trade. Like UCAD, UJ, all those pairs, dollar strength is going to be really good. Would it help gold sells? You know, it's been pretty tough trying to sell gold, right? So I wouldn't think that would be the best option to sell gold, right? Because it is really no bear market in gold. So it's very tough to sell it, you know, but buying the dollar would be the best bet, right? So that's how I look at it. But if we get a good trade for euro, like don't overtrade. You know, like if this comes out as a really good trade, we get a rate cut and then say that we enter the sells from the rate cut. And if you could take 20, 30 pips from that right away, call it. You know, you don't really have to like you can focus on the press conference, but there's a higher chance if they cut rates and we're going to see probably dollar euro melt a bit and then we're going to see it recover is a higher chance. But if they pause rates, y'all should be all over those buys. Everything with euro is good. It's just going to show strength. Like you should be all over that shit, no matter what. If we get a big if we get a pause, euro strength that should be a literally a no brainer. All right. So hopefully they give us that. Like hopefully, you know, they pause rates. Like if it stays at a 3.7, yeah, we all over that shit. Buying euro. But if they cut, I expect some euro weakness, but it's more about the forward guidance after that. All right. But if we see it breaks a support, it's just, I would prefer you to wait. Like, I would prefer, yeah, if they pause rates, every euro pair is going to go up. But I'm going to look at euro JPY. It's tough because, like, if it's a 25, it's expected. You know, like, you don't want to get caught in a spike and then the move just recovers. So if they do a 25, like I'm gonna probably wait till the forward guidance. All right. But I'll let you guys know. Let's see what happens and I guide you guys. All right. We got about 20 seconds. So if it's a cut, I'm gonna read the statements and I'm gonna let you know like if it's dovish, if it's more dovish, then we're gonna see euro weakness continue. But if it shows more about uncertainty, then it's gonna cause euro to consolidate. All right, three, two, one. Oh, it's a pause. No, they cut. Sorry. Or they cut. So they cut by 25. So now it's about forward guidance. So Euro didn't react. So let's see what happened now. I'm seeing Euro gain strength at the moment. Yeah, Euro's actually gaining strength. It's just so many statements to go by right now. Hold on. Yeah, so they cut inflation outlook has affected rates to the downside price. So that's dovish. I'm not in anything yet. Inflation remains high, so that's hawkish. We'll keep policy rates restrictive. All right, so that's hawkish as well. So I can see why the euro strength is coming in. Nothing is there. Not committed to any path. So this is not really giving us nothing. So I can see why euro gains strength. Yeah, domestic inflation remains high. Wages are still rising. So they're very hawkish regarding inflation. So like to me, this was about inflation. So now, right, incoming information about on inflation shows that the deflationary process is well on track. So now that's dovish. And that was the last one that they put. But before that, everything was pretty much on point with higher inflation. So that's they cut rates. But to me, this was still hawkish forward guidance. So why are you putting in all caps? But yeah, like I'm not in anything. So they did what they were supposed to do. They cut rates, but you see the forward guidance, like literally the concern is about inflation is pushing higher. So I would wait until the press conference. Like Euro now has switched from high and now is pushing lower. So this could be the algorithm, because it's a rate cut. So this does support Euro weakness, but the forward guidance doesn't support the weakness. So wages are still rising at an elevated pace. Like this to me shows that the Euro strength should be there. So I would just be patient for this to happen. I'll wait for the press conference. I think that's the best option is wait for the press conference. This is not really like if Euro continues to get weaker, this data doesn't really support it. But the algorithms could help Euro push lower just because it was a cut. But I don't think that this will last. I'm not too I don't want to risk trading this lower. I really don't. Yeah, because this to me, the forward guidance supports that they should stay restrictive. So we don't see anything about growth. And I think that's what we want to pay attention to now. So they expect that inflation is still trending higher, right? They're still concerned about higher inflation. So if they give us that about growth now, that will be reasons for Euro strength to come in play. So now we got US data coming at like so if we get we like I highly doubt it, but let's see. If we get weaker US data, right? Say if jobless claims comes in red, that will probably be some good buys for Euro USD. I think that would be if we get a weaker dollar, that would probably be definitely be some good buys for Euro USD, and I think we should focus on that. Yeah, it's not enough. JR, they didn't give us enough. Well, it's the forward guidance is hawkish. I would say it's hawkish. That's why Euro is not pushing lower. That's why it's spiked higher and is not pushing lower because this is a hawkish, like pretty much a hawkish commentary right here. But they're not saying anything about growth. So I think that's what is missing. So usually the press conference, that's normally where they would get that out of her. And she's been very like President Lagarde. She's been very easy regarding the press conferences. Like she literally gives out yeah, she literally gives us a good give us a direction pretty much. So I'll be looking forward for her press conference. So I'm be looking forward for what she got to say. So like again, I like Euro strength. So I think now it's gonna be about focusing. Let's focus on the dollar moving up. And I think that's going to be the opportunity now. So if we get DXY to push weaker, we get a weaker dollar coming in from this data print. I'll be looking at Euro USD buys. I think that's going to be the best option because the forward guidance to me, like she's pretty much it was data dependent, and they still expecting inflation. They're not confident inflation is lowering, so that's hawkish. So now, if we get a weaker dollar, that should help those euro buys leading towards the press conference. Trading during the press conference is a bit risky because she could still come off extremely dovish if she chooses to. But it'll be interesting to see what she says. So and it's a chance that this print may come in mix as well, guys, because of all the shit that's been going on. Equities has been rising for the week, with no real like obviously if we look at the market updates where I post about equities, everything for equities to continue to push higher is still valid, right? We haven't had any reasons for equities to sell off. So there's no reasons to be taking sells. There hasn't been nothing like if you just read it, there's been nothing in the economy that's causing for equities to sell off. But there's, like taking advantage of the buys is just simply technicals, but now today could be a good reason depending on what happens with the data. But it's just again, when it comes to jobs, right? Could this jobless claims be temporary just because of the hurricane? And I think that's just the only issue is that if this is caused because of the hurricane situation, then I don't think the markets would over exaggerate it because they know that it's just going to be temporary. But if they expect this to be a long term change with bad growth coming in the future, that will be something we will be concerned about. And I think that would probably be the best opportunity. So for opportunities now for this, it's good to see that gold is in a range. Mostly all the pairs is pretty much in a range, which is a good sign. So again, like I think the best option for me Like I will take advantage of Euro USD if we see that this data comes in red. If this data comes in red, that should support Euro USD pushing up higher. That would be a really good opportunity. I feel like that would be a good opportunity for a good buy, and then trying to break even before the press conference. So another one is if we get a red print, right, weaker dollar, that should support gold to continue to push higher. You know, we should see gold breaking structure and pushing higher. Same thing for GBP USD. You know, all the dollar pairs should react the same, but GU, I would prefer to take sells because we have a dovish Bank of England. So GU sells would probably be the better play from a long-term perspective, a midterm perspective, if we get a higher print, right? So if we see that this data comes in green, surprisingly, I would prefer to be looking for GBP USD sells. All right. Also, I don't have enough screen space, but I would also look at AUD USD as well, and it should be following Euro US. It should follow Euro USD because just remember, recently we had a strong labor print for Australia, which is going to make them stay restrictive. So if we get a weaker dollar, right, that should help Euro AUD USD to the upside as well. All right, so just in case for you guys that like to trade AUD, yeah, so USD JPY is more of a neutral pair. So regardless of what happens, you know, dollar. Hold on. What happened? No, have juice. All right, guys. One sec. Yeah, I'm gonna just put it here. AUD USD. Yeah, it looks the same. It kind of all the pairs pretty much looks the same. Uh, yeah. So when I'm looking at this print, like AUD USD to me is gonna be the best option if we get a weaker dollar. And if we get a stronger dollar, like GBP USD, to me would be one of the best options too. But regardless, all the dollar pairs should react normally. If you just want to trade a neutral pair, I say that USD JPY would be a good bet, you know, just because of how the yields impact the yen. So typically that would be a good move. But we need data to be clear today because we have three different prints. So you don't want to be, if it's mixed, it's okay to just stay away. All right, and just be patient when it comes to it. You don't have to trade it right away too. Like, you could also wait until the data, you know, digest later on in the day. You could wait until after 9:30. You don't have to take a trade right away. All right, because there's also NYSC open, and there'll be plenty of opportunities afterwards as well. You don't have to really trade from this print, you know, but I want to take advantage of the opportunity when it presents itself, and then we could just chill. But I'm having I probably believe that we're probably going to have to get a good option from the Euro press conference. And I think that will probably lead to a better trade. There's a higher probability that this shit probably just going to end up mixed anyway, you know, so I'm not having my hopes up. But if everything comes in red, that's going to be the clear edge when everything comes in red, you know, so I'll just be prepared for that. Put this here so we could look at the numbers coming out. We don't need this right now, so I'll put it away. Uh, yeah, I would expect a red print to hurt equities. I have a feeling that's what's going to really happen. But you know, like typically, if we do get a red print, that should encourage further rate cuts, right? Which should support equities. It should support it. But I think equities has been reacting to sentiment so much lately that I think I would prefer that first. But typically, you don't have to trade it right away at 8:30. You could just wait to see how the markets move after 9:30, especially the equity markets, because that's when a stock exchange opens. just to get an idea of a direction. So at least you know when you see a direction, you would know why, right? Because it's hard to pinpoint right away how the stock market is going to act from this. Because like if we get red across the board, that should signal that technically that should really help equities go higher because that will signal more rate cuts, and more rate cuts is good for stocks. So that would be another reason for it to buy up. But if they look at this as like more of a fear, a market fear, then that's different, because still bad job numbers, it's still bad for the markets. But that's why I was saying it depends if it's temporary or not. So I would prefer to just chill. Looking for the strong data for later, then get on. Yeah, if you want to trade AUD CAD. What's the obsession with trading CAD? Like we've been trading CAD this whole time and it's been trash. I don't know what's the obsession with CAD. If you're winning with it, yeah, yeah, do it. Do what's working. But strong data, like this data has nothing to do with AUD or CAD. So I don't know if it was a mistype, but and sometimes it's just a little common sense. Yeah, like if you're looking at the US, and they say like, "Oh, this is about United States food." You're just going to come up and just bring Australian food, like, it's just sometimes a little common sense when it comes to data. Like what does the United Kingdom have to do with Switzerland, and it's just certain things like that you have to try to understand. Yeah, just I don't. It's just like because like with trading, like we do got 30 seconds. You just don't want to overthink it. Like a lot of this, you're hurting yourselves by overthinking it. Just try to keep it simple as possible so you could take the best opportunity. Yeah, AUD USD would be better if we get a weaker dollar. Yes, but I'm gonna be looking at. I'm gonna look at Euro USD if we get a red print, but also AUD USD would be a good print too. All right, guys, got 3 seconds. All right, 2, 1. See what happens. All right, we're seeing nothing yet. Retail sales did come out higher. Yields is pushing up. It's looking like, all right, retail sales did come out stronger. That was the first print. All right, jobless claims actually came out strong too. So that supports a stronger dollar. Philly Fed is higher too. So this could support stronger dollar. All right. So what we're going to see is Euro JPY is pushing higher. I'm not entering Euro USD sells because I don't trust that right now for Euro, but we got a stronger dollar. So now this to me supports upside for equities. So the only thing I could see from this right now is USD JPY broke structure. This will be a good trade pushing up just because, like, obviously the yields and the dollar pushing up, it weakens the yen. All right. So USD JPY is going to be a good trade. Gold, it just depends, man. Like selling gold, it's really tough. It's tough. All right. It's super tough. Like selling gold is very tough. All right. So this supports stronger dollar. But if the yields and the dollar continues higher, this is going to continue. The only best trade I could really see is USD JPY. That's the clearest one. You don't want to take AUD because we have a strong Australia. Like Australia is strong, so you don't want to sell AUD USD. GBP USD on the other hand, like that, this could be a good sell too because, but the pound right now is strong for the session. So USD JPY is the only best option I could see. Gold, as long as gold is following to do the opposite than the dollar and the yields, gold sells right now should be a good play. You don't want to trade euro because we have the press conference and the forward guidance was hawkish. So this is just reacting to the dollar strength. So I don't really trust it. So the only three pairs I could really see right now is UJ, GU, but GU is still in a range. And the pound is still strong. But if the pound starts getting weaker, then this should support GU downside. Intervention, that's really, I would say that's smart to intervention risk. I would be aware of that too. I think that's smart to pay attention to. Yeah. But could we help it? I don't think we could help it. It's just like if you're up significantly, like if you're up 20, 30 pips, just try to break even or you don't have to trade it. I wasn't really looking for a higher print. This is by surprise, really. It's a surprise, seeing this type of strong data. But this definitely supports that the feds are restrictive. I'm not in anything. I'm gonna wait for the press conference to take a trade. I was expecting this to turn red. I really wanted this to turn red. I wasn't really expecting this. This does support dollar strength. I really wasn't expecting this. That's why you really don't want to predict, but I wasn't expecting this. But like the only thing I could really see that is good at the moment is USD JPY. Like the intervention risk is like it is a scare, but they've been very quiet lately. So if they come out with headlines like saying anything about dollar strength, then I'll be a little cautious. But right now, like if it happens, it's like there's nobody could predict that. But it would fucking hurt your account. It will, and it would suck. But nobody could predict it. Yeah, like this would be the zone, but we still have a dovish Fed, so that's probably why it's not as big as what it was before, because the Feds were restrictive back then. Now we're in a cutting cycle, so they know that the dollar is going to start getting weaker. So I don't think they're going to be that strict about it. But yeah, as you can see, like the best pair was just USD JPY. But this should support equities to the upside too, because sentiment wise, this should support stocks. Good retail sales, strong Fed business index, strong jobs data. Like this, I was not expecting it, but it seems like the markets wasn't neither because this wasn't. We don't see no real rapid movement. But yeah, AUD USD is out the picture, so I'm gonna just put that back to Nas. Yeah, so I think it's just being patient, like literally probably wait until like after 9:30, 10 o'clock, see how the markets digest the information now moving forward. But this supports dollar strength, but it seems like the only really good move, Euro USD started breaking lower, it did, but I don't trust the Euro sales at the moment. But like USD JPY to me is one of the best moves. I think that's like I would probably take that just because of the yields pushing lower. Netflix. I mean, I think the banking earnings last week would have caused more of an effect in stocks, and it didn't. Like Netflix, it does have an impact in Nas, but I think earnings lately hasn't been bad. So I don't really. I think it's just going to be to see if earnings is going to affect the markets. It has to be one after another. I don't think one specific stock is going to. Well, it can if it was like Nvidia or something like, but Netflix, I don't think it's going to really cause an impact. I think the sentiment is what's going to really drive the markets today, and I think this is supports. This looks like it should be a green day, but again, we still got the tensions was rising last night over Asian session, so that could continue to pick up over New York now since all the reporters and everybody's up now. So like just be prepared for that. Yeah, Euro AUD is freaking melting right now. Yeah, yeah, from yeah like the from Asian session AUD was a good trade. Yeah, this one is tough. I mean, the only one I could really say that is USD JPY if anybody's in it, but everything else is like more like pound dollar looks really good. I would trust those sales pound dollar, but everything else like yeah, USD JPY or pound dollar is like the only two I would really trust from this event from a currency perspective. Gold, I think it's just about being patient. All right, guys, does it make sense though? No, gold is not good to enter right now. I mean, I expect it to. Like, I would want it, but selling gold is tough. I don't think that we're in that stage yet, but it should support gold sales. If you do, you should just be a little cautious about it, right? That you don't want to be trying to enter sales too early, and then you get caught in a pullback, and then gold actually follows sales later, like 2, 3 hours afterwards. So I think that's the problem. It's just, I don't think right now. the volume is there for it, as you could see. Typically like buying equities, it's already at the high. So it's like trying to buy this supports stronger equities. But from a technical entry perspective, buying it from the highs, do you really trust that? Even though that it could still just push up, right? Like US 30 could still push up, but you're buying it at the highs, and that's already a rough battle, trying to buy at the highs. Not saying that I don't have to continue higher. It can, but at least you can understand the risk in it. Is that you're already at the highs. Data supports it to push higher, but it's like, fuck, do I trust entering at those highs like this? So to me, I think the USD JPY was just the best trade. Other than that, everything else like Euro USD, even though that's pushing lower, it does the opposite of DXY. So that's pretty much why Euro USD is doing that. The pound is strong. That's one of the reasons why GU is not pushing lower. Even though I still believe the pound should be fundamentally bearish, I still like the idea of GU sells if dollar strength continues. So I think, yeah, like that's just how it's looking. I trust. I like USD JPY and GU sells at the moment. I like equities pushing higher, but from just a technical perspective, equities at the highs, I think that is tough trying to buy it at the highs from an equity perspective. Matteo, list because it does the opposite of DXY. Yeah, dollar is the secondary pair for Euro USD. So all the dollar pairs are all reacting to dollar. And Euro USD is the most traded asset compared to the dollar. So it just if you invert Euro USD and it will look the same as DXY. So that's why. Yeah, so like typically if you don't know what to trade and dollar data is coming out, you could just look at Euro USD, but I like UJ better, but Euro USD is just as good because it just does the opposite of DXY. But yeah, like it's just yeah, again, like you just repeat because I know people don't like to listen sometimes. Dollar strength, this data supports dollar strength and yield strength. It is just supports the strength, which should support gold cells. It support dollar strength across the pairs. But when it comes to the easiest one, I think GU and UJ were the easiest ones. This does support equity upside from a sentiment perspective because this supports strong growth, strong job numbers, strong retail sale growth, right? So I think that supports equities from a sentiment perspective. But the problem technically with equities is that you're already at the highs. So could it push up another 100 pips from here on out? It can, but would you trust it? And I think that's the issue. But I was surprised by this. I was expecting a lower print. So yeah, that's why it caught me off guard. It really did caught me off guard. But yeah, like I will leave Euro only like now if Lagarde comes out dovish in 5 minutes, like because she's just going to repeat everything that she said that we read already. And then the press conference is where she's just going to give information about the markets. So if she literally comes out dovish, like Euro USD is going to melt. That will be that it's just going to fucking melt. But if she comes out hawkish, that I think Euro JPY buys would be the best, or continue like yeah Euro JPY or Euro pound buys. My opinion. But yeah, like, yeah, now it's just waiting. We got about 5 minutes. So far, this week has been very good. Like today, it just like this higher print caught me by surprise. But you can even see the dollar. It's not, we still got a lot of session to go. So I know most of you guys that like New York session, I would say just wait, give it like 2 hours, wait until NYSC, let the markets digest the information and then give you the direction that it wants to go. So either or, if you see equities push higher, you know why. But if equities start pushing lower, it could be a profit taking move, right? Or it's about the markets could be expecting the feds to stay restrictive. And if they look into pause rates, right, stay restrictive, that could help equities continue to push lower as well. So I think it's just about being patient now. I'm gonna try to see if I could get that if she's actually going live, and we'll watch it together. No, equities push lower during rate hikes. Mhm. Like from an educational perspective, rate hikes are, yeah, is bad for the stock market. But in this current environment is different because of what we're currently going through. Because equities is reacting more towards sentiment than actually monetary policy. Because equities has been already pushing higher already, anticipating rate hikes. So the buys on equities been happen from the markets being forward looking. So if you're looking at it from a perspective of now, you're probably like 3 4 months too late. Because the stock market's already been rising from the fact of actual rate cuts. Yeah, I got you, Steph. Yeah, I clean it up afterwards. Uh, But yeah, just for you guys to understand, like I expect dollar strength to continue for today. Like I really would. I can't really see why dollar strength would not continue. I can't. This supports dollar strength. So if you we can obviously I want to see dollar stay above this zone, so I don't want us to forget about this, just because we were doing an ECB press conference, but I expect dollar strength to hold as long as we could just stay above the zone. I still expect dollar to, like, even if dollar does push back a bit, that's still good because again, we're waiting, but I want to see dollar still stay, at least stay at around this zone here, and then start pushing up higher. So I still expect dollar strength to continue for today. It's a really good print. I can't. If we see dollar recover, it's going to be hard to identify really why that's happening. If dollar continues to push weaker, it's going to be very hard to anticipate why that happened. But all the green arrows should be the direction for today. So I would just remember that, even though that we're looking at the ECB press conference, you don't have to trade it, but at least you can understand what we're looking for. So equities, again, the only downside I have when it comes to equities is trading that shit at the highs. I think that is the hardest part, is trying to trade equities at those highs. So just be cautious of that because this data does support equities to stay strong. But it's a possibility it could lead to profit taking, and you can see equities do recover. So I would say just be a little patient when it comes to it, especially at those highs. Just get a little more price action to come in. But I'm waiting for this press conference. I want to see what she says. Typically, she's just going to read the press conference now, and then once the Q&A starts, that's where it should get a lot better, where she at least should like tell us I really what she is planning to do. All right, just waiting for her to start speaking, and then we're going to listen to her live. Just go to the Europe. I'll just leave it here. Uh, All right. So just remember dollar. I'm gonna look at euro like euro pairs, but just remember what I said about the dollar for you guys that don't give a fuck about what's going on. Just remember about the dollar. All right. So I'm gonna be looking at euro JPY because if she comes out hawkish, right, with hawkish forward guidance, I would like to take advantage of euro JPY. But if she confirms more rate hikes, if she continues to stay dovish, right, I would say euro AUD would be a good opportunity. Also, euro USD would be a good opportunity if we get a weaker euro. So that's the direction I want to see the markets go from her press conference. But if you guys don't care about it, I totally understand. Just watch the dollar, watch equities, and just remember what I said about the dollar. Just give it time, just give it some time.
Microphones. And with that,
thank you so much. And I would preface my usual monetary policy statement address by a great thank you and the expression of our collective gratitude to you, Bostian, to all the staff of the Central Bank of Slovenia, and to all the Slovenian authorities and the Slovenian people. We've been beautifully greeted, and it's a real pleasure to have spent the last 2 days here in your company and in Ljubljana. With that, good afternoon to all of you. The Vice President and I welcome you to our press conference. Again, thank you, Bostian, Governor Valle, for your kind of hospitality, and thank you for your welcome. And we express all our gratitude to your staff, some of whom are present in this room, actually. The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated state assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The incoming information on inflation shows that the disinflationary process is well on track. The inflation outlook is also affected by recent downside surprises in indicators of economic activity. Meanwhile, financing conditions remain restrictive. Inflation is expected to rise in the coming months before declining to target in the course of next year. Domestic inflation remains high as wages are still rising at an elevated pace. At the same time,
she's hawkish.
Labor cost pressures are set to continue easing gradually, with profit partially buffering their impact on inflation. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach.
All right, so she's just reading a statement, but she is really hawkish from what's going on. It's just that the dollar strength is what weakened the euro currency. So that's the problem right now, is the fact that euro is weaker from the dollar data. But this, so far, she is hawkish. So we have to wait for the press conference, though.
The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the incoming information suggests that economic activity has been somewhat weaker than expected. While industrial production has been particularly volatile over the summer months, surveys indicate that manufacturing has continued to contract. For services, Surveys show an uptick in August.
Well, she talked bad about growth, which is dovish.
The latest data point to more sluggish growth. Businesses are expanding their investment only slowly, while housing investment continues to fall. Exports have weakened, especially for goods. Although incomes rose in the second quarter, households consumed less, contrary to expectations. The saving rate stood at 15.7% in the second quarter, well above the pre-pandemic average of 12.9%. At the same time, recent survey evidence points to a gradual recovery in household spending. The labor market remains resilient. The unemployment rate stayed at its historical low of 6.4% in August. However, surveys point to slowing employment growth and a further moderation in the demand for labor. We expect the economy to strengthen over time as rising real incomes allow households to consume more. The gradually fading effects of restrictive monetary policy should support consumption and investment. Exports should contribute to the recovery as global demand rises. Fiscal and structural policies should be aimed at making the economy more productive, competitive, and resilient. That would help to raise potential growth and reduce price pressure in the medium term. To this end, it is crucial to swiftly follow up with concrete and ambitious structural policies on Mario Draghi's proposals for enhancing European competitiveness and Enrico Letta's proposals for empowering the single market. Implementing the EU's revised economic governance framework fully, transparently, and without delay will help governments bring down budget deficits and debt ratios on a sustained basis. Governments should now make a strong start in this direction.
So we're seeing a weaker euro now because she pretty much said that incoming data suggests that activity is weaker than expected. So this is what we wanted to, is that she downgraded growth, right? So I think the press conference is going to be a bigger move, just to make it very clear. But at the moment, like, it's still mixed. So it just seems like the markets are still pricing in that they're still going to be in a cutting cycle, but it's nothing clear at the moment. Like wages, they're expecting to stay strong. So she's expecting strong inflation, but weaker growth.
Domestic inflation is still elevated as wage pressures in the euro area remain strong. Negotiated wage growth will remain high and volatile for the rest of the year, given the significant role of one-off payments and the staggered nature of wage adjustments. Inflation is expected to rise in the coming months, partly because previous sharp falls in energy prices will drop out of the annual rates. Inflation should then decline to target in the course of next year. The disinflation process should be supported by easing labor cost pressures and the past monetary policy tightening gradually feeding through to consumer prices. Most measures of longer-term inflation expectations stand at around 2%. Turning now to our risk assessment. The risks to economic growth remain tilted to the downside. Lower confidence could prevent consumption and investment from recovering as fast as expected. This could be amplified by sources of geopolitical risk, such as Russia's unjustified war against Ukraine.
Yeah, so weaker growth is what's important. That's what's really hurting the euro right now. So the euro sells is looking to play out. So like euro USD is looking to push lower. But she was talking positive about like risk to growth tilted to the downside. That's what's really hurting euro right now. The only issue is inflation.
If the lived effects of monetary policy tightening turn out stronger than expected.
But I'm not in anything yet.
If the economy grows more strongly than expected, or if easier financing conditions and declining inflation lead to a faster rebound in consumption and investment. Inflation could turn out higher than anticipated if wages or profits increase by more than expected. Upside risks to inflation also stem from the heightened geopolitical tensions, which could push up energy prices and freight costs higher in the near term and disrupt global trade. Moreover, extreme weather events and the unfolding climate crisis more broadly could drive up food prices. By contrast, inflation may surprise on the downside if low confidence and concerns about geopolitical events prevent consumption and investment from recovering as fast as expected. Monetary policy dampens demand more than expected, or if the economic environment in the rest of the world worsens unexpectedly. So looking at the financial and monetary conditions.
But you see that what she said about inflation is the fear is just war. The geopolitical tensions is what could drive inflation up higher. So
Financing conditions remain restrictive. The average interest rates on new loans to firms and on new mortgages were down slightly in August to 5% and 3.7% respectively. Credit standards for business loans were unchanged in the third quarter, as reported in our
yeah, she's
latest
not giving anything clear, but I like what she said about so because it sounded dovish overall that inflation is only going to rise from her expectations is only if geopolitical tensions continue to escalate and then the weather, right? Obviously, how it is in Euro, that could increases the prices of gas and food. But she's not. It's very dovish to me because it would be different if she was saying inflation was going to rise from other measures. So growth is expected to come down. I like a weaker euro from what she's saying. It looks like that more rate cuts is more going to be in the picture.
This mortgage lending picked up slightly.
Sorry. Yeah, so I like the idea of weaker euro. What she's been saying so far, it makes sense for euro to continue weaker. If this continues, I would prefer to see weaker euro, but we got to wait for the Q&A and see what she says during the Q&A. Would make it a lot more easier to digest because they're going to have her ask specific questions about forward guidance. And remember, uncertainty is not what the markets want. So at the moment, it is neutral, but it seems like they're going to be in this cutting cycle moving forward. So I like weaker euro from this, but it'd be better if she could literally give us a little more, but she's not. All right, Q&A now.
Good afternoon. Thanks for taking my question. My first one would be on the next steps. So it sounds like you expect to reach a 2% target maybe sooner than predicted in September. Does the decision to cut today really represent a shift of gear? Do you expect a cut at every meeting
This is a good question. So let's see what she says. It's going to determine what euro does.
Second question would be on the US election. So you mentioned trade tensions as a risk, but can you elaborate how you think a return of Donald Trump to the White House and his plan to impose tariffs would alter the outlook for growth and inflation in the euro area?
Well, thank you so much for your question. We decided to cut all our rates by 25 basis points because
Yeah, I like the weakness in euro. Like euro dollar is a good one.
track. And all the information that we received in the last 5 weeks since our last monetary policy decision heading in the same direction.
Yeah, I want to take a sell on euro AUD.
Headline, whether you looked at PMI numbers, all categories, composite manufacturing, services, employment, heading downwards as well.
Euro dollar is a good sell. That should be continuations.
Specific numbers and data will be available soon. It is the same story, whether it's a corporate telephone survey or other surveys that we have available, it's all heading in the same direction, downwards. And that really confirms.
I like dollar strength. So, all right, looking at the markets now for the dollar, yields are still higher, dollar is still strong. Euro USD is still respecting those highs. Remember what I said about gold, about being patient with gold. So it's still in a range. It didn't break structure yet. Euro USD is still looking good. As long as dollar strength is there, equities are still pushing higher.
That we continue to be data dependent. And honestly, this decision is a case in point of us being data dependent. We have all the available data, all heading in the same direction. The largest countries all also moving in negative territories in PMI numbers. So those are really strong elements because of their synchronization and the similar direction that we have to take into account those data and make the decision that we have made. But we are going to continue doing exactly the same thing. And it's clear that between this meeting and the next meeting we have in December, we will be receiving more data, some of it soft, some of it hard, and more readings. And all of that will help us decide, as I have said, meeting by meeting, what monetary policy stance we should decide at that time.
Yeah, I'm in Euro AUD. So she pretty much gave it out, like a euro dollar too. I got a small position on euro dollar because it did push lower. I am expecting a stronger dollar for the session. But remember, she is data dependent. So that could cause consolidation. But I like what she said. I think this supports dollar weakness, a euro weakness. This should support euro weakness. All right. So this should support euro weakness. If euro gains strength from this, I wouldn't understand why. This supports euro weakness. So I really think that she tilted her hand so far.
Matters for an economy like the European economy, which is very open. Trades within itself, of course, but trades also with the rest of the world. So any hardening of the barriers, the tariffs, the additional obstacles on that possibility to trade with the rest of the world is obviously a downside.
Thank you. Next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you. Yeah, thank you. Hi. My first question would be on the economic outlook. So you were now referring and pointing out that the economy really doesn't really look great and all signs point towards more downspin. Why don't you go for a 50 basis point cut? And is that something you have discussed?
That's a good question.
Table for the next ones. And have you been discussing the topic of the possibility?
Yeah, she's expecting recessionary fears. That should be bad for euro.
Stands restrictive.
But that she's asking, so why you didn't do a 50? So this is important.
For your question. It is a fact that the economic activity has come in
on the basis of the elements that we have and the indicators that are available, has come in a bit below what we had anticipated. But this is not a projection exercise. We are in between two projection exercises, and clearly December will be another opportunity for us to, run all the data, all the information through our model, and to apply the three-prong approach to our stance. What was on the table and what was debated.
No, I'm in EA and EU.
Basis points cuts. End of the story. We had discussions and debates and rationale and narratives and all of that is part of the debate and the legitimate discussions that we have within the Governing Council. But at the end of the day, there was a unanimous decision to cut rates by 25 basis points. It may have been the Slovenian great atmosphere that precipitated this not more than consensus. There was unanimous decision to cut by 25 basis points, and we thought that it was the appropriate decision to make.
Yeah, she ain't gonna answer the 50 because that would destroy the markets right now. But yeah, the euro weakness is good. I'm gonna break even on euro USD. I didn't break even yet on euro AUD yet, but I'm break even on euro USD.
Risk of undershooting.
Yeah, Zulu. I've been saying that about the dollar, brother. Y'all don't believe me? Y'all don't trust me or something? Nah, y'all just don't fuck with me. That's the problem.
Clear to all is that we still have risks on both sides of our forecast, upside and downside, probably a bit more on one than the other, probably more downside risk than upside.
Oh man, she said probably more downside than upside risk on inflation. Yeah, this is gonna melt the euro. Yeah, it really don't matter what she says afterwards now. That's why I like her. Like she don't be holding back. Jerome Powell is like the markets be up and down.
Instead of at the end, we will reach natural rate earlier than
The only thing that can mess this up now is if we get some geopolitical tensions coming out. Because remember, like escalations between like Russia and it's Russia and Ukraine. That's what hurts it's not Israel and Iran. It's Russia and Ukraine. That's what hurts the euro economy. So anything regarding that is going to be an issue. All right, yeah, y'all should be good. Like euro's dropping. If y'all followed, that would be the true test if y'all fuck with me or not. Or y'all probably buying and selling gold right now. You see, you just got to take what's easy, and she literally gave out what was easy. Like all the yen pairs is just like, golly, god damn. All right. At least I'm gonna go break even. Yeah, like GU was a good call. You in equities? Let me see. Yeah. Like yeah, she's done. Like she already said what she needed to say. It really don't matter after that. You could take partials, whatever y'all want to do. Just be a winner for today. Yeah, like that's what I was saying about gold. You see how gold is acting? Maybe after like later on in the day to see what happens with gold, but like it's tough trying to sell gold. It's just not a sell market for gold at all. I wouldn't trust selling gold. But what we do trust right now, euro weakness now, so that's going to help euro USD, those sells, especially with stronger dollar. Equities, I like the idea on equities, Michael. It's just those highs, man. Like I think if we see some recovery, it's definitely going to be some profit taking coming in. But this was from a sentiment perspective, this supports that. But at NYSC, it's just you don't know which direction that volume is going to come in at. GU, I like the sells on GU because we do have a dovish Bank of England, right? Now we have a dovish ECB. We have a hawkish Reserve Bank of Australia. So not hawkish, but they had strong job data. So that supports AUD strength. So that's why, yes, I would like to hold Euro AUD. Euro dollar, I think that should be take partials and matter. I like dollar strength. I think what's going on now with the Feds is data is still supporting so much like for them to not cut by 50. I think dollar strength still makes sense, you know. So I trust euro strength, euro weakness. That's why equities, I'm not so sure about. I would probably wait for equities to push lower and then look for opportunities to take it back to the highs. Gold, it's just a buy cycle. There's no reason to sell gold. Even if we look at the yields in the dollar, gold is not reacting because we have geopolitical tensions going on, right? And now we have a possibility of China probably going to invade Taiwan again. We still have Russia Ukraine tensions that's looking to escalate. Imagine if Trump becomes president. You already know Russia is going to fucking either going to stop or the shit is going to get worse. And then we have Iran that's looking to retaliate, right? And in Israel. So gold is not in a sell cycle yet, but it doesn't mean it won't sell off probably later on in the day, right? But sometimes we do get some delayed reactions, but you just need to see a breakout of structure on gold, right? So just put your alerts in both areas, one at the resistance, one at the support. Like support could be at 26, I would say 26.75. Resistance will be at 26.90. All right, but everything else is playing out nice. The yen, I don't really understand why the yen is not pushing lower. So yeah, like that's a tough one. I don't know why the yen is not pushing lower. That is a concern. That is a real concern. Is why isn't the yen? I mean, but that's why I'm focusing on euro, guys. You know, I was focusing on euro. It's a I really can't understand why the yen is gaining strength and is not a risk off market. Yields pushed higher, so did the dollar, but the yen is also high too. Yeah, a little. It's not intervention, but it's a little. I would still like if you're in it still. Like it's nothing. Like I mean, it's not breaking below 149.800. But dollar did gain a significant amount of strength, and euro JPY didn't catch up. So that is a concern. So I would just watch it. But if it breaks below 149.5 or 149.650, like if you hit that area, then it's okay to close that trade because you don't want to just close because of emotion because technically this is still buy structure. Is if I draw the line here, right? Technically, you're still at buy structure. So you're still in this range. I would still expect price to push up higher. But if price goes like in the middle of this zone, then this is where you should be concerned and say like, okay, yeah, this trade is a fucking dud, right? Because what if the euro does get weaker later on? But it is concerning. So I wouldn't blame you if you want to close out of that trade. Sometimes you just pick the wrong pair, you know. But this is just a reason why you focus on a pair that tends to have volume and is a euro rate decision, so it tends to have volume. And the only thing we had to wait is until she gave us a clear signal. So at least like take partials. I'm gonna, take partials, break even, whatever you want to do, but you should be a winner for this session. You know, if you've been following for this week, you should be profitable for this week. But yeah, Euro JPY is that's a tough one. I wouldn't even it's kind of fucked up. It's hard to understand why the euro gains the yen, sorry, why the yen gains some strength like this. Because like that's like it hasn't that really haven't happened in a while that euro like USD JPY did something like that. That we just see that the yen just gained strength along with the dollar and the yields. That haven't happened in a while. So either take that as a sign for something and probably yeah, just probably call it so it don't be like a bigger loss. Because yeah, that is alarming. It's like trying to force sells on gold right now, and the markets of gold, like gold is not selling, and it's like you're trying to force something when it's literally telling you it's like, nah, we're not. It's not looking to sell, right? So you just want to take that sign and just say, you know what, let me just get out of that because there's no reason to take an even bigger loss in that when it's literally trying to tell you it's not trying to push higher on UJ. Like you shouldn't be forcing sells on gold when price is literally telling you is not pushing lower. So just take that sign and just call it. But euro trades, like it's up to you guys. I'm gonna take some partials. I'm gonna leave the rest at break even. But yeah, like this is it for the session for me. You know, it's been a really good week so far. So like don't overtrade. I know like now after 10, most of you are starting to trade after 9:30 and 10 o'clock. Do I expect dollar strength for the whole day? Probably not. You know, obviously we're going to probably get some pullbacks and some recoveries. Equities, I do expect equities possibly to recover, but data today supports dollar strength. It should support equity upside as long as there's no profit taking. And euro should be a little pressured for the week. I mean, it should be pressured for the day. Euro should be pressured for the day, but pullbacks happen. So you just have to understand and be aware that pullbacks do happen. All right, guys. If y'all have any questions, like let me know. She says we do not see a recession, so and still looking for a soft landing. That could cause some euro strength. So just be prepared for some pullbacks on euro. But she's also concerned about growth. So mixed comments coming in, but at least take some partials and go break even. Yeah, that's awesome, man. My TP, I took partials. I'm gonna try to let this one go. Like I'm gonna try to let this one ride. I've been trying to see if a trade could just go. You know, I'm gonna try to hold this one for Euro AUD. I don't really trust the dollar. No, I didn't get stopped out. My entry was at oh, if it pulls back, then I wouldn't know because then I would think it would be because of AUD. Like because look at GJ as like an example. Like we had weaker CPI for GJ, right? For the pound. We had this big bearish move. So you have to anticipate this pullback. You get this continuation and look what happened. It pulled back. So if your stops is like above structure, then you don't have to worry about this. But pound is still not pushing weaker randomly, right? So I think that's just what you have to be aware of is those pullbacks. So I like the dovishness. I think that Euro AUD would probably be a better option to try to hold. If anything, I think that this would probably be the best option is Euro AUD. I'm just trying to look at a higher time frame. Yeah, I feel like that this has more downside potential because the momentum is now. You know, it's like if the price pulls back, it's most. I wouldn't trust it. If it pulls back aggressively, I just wouldn't trust it. You know, but again, if we pull back and then we call it structure here, and then we just start breaking back structure, breaking back that support again, then I'll think that'll be okay. But it's like your stops like has to be high. Your stops has to be at like 62, 600. You know, at least put it there. But then what happens if we get some geopolitical tensions? You know, and I think that's going to be the concern, you know, and that's going to weaken AUD and then that's going to blow up the whole trade. So the only thing that's making me hesitate about holding trades is that these tensions is still going on. So that's why like I would take some trades, take partials and let the rest run just because we don't know what's going to fucking happen, right? Because we're trading pairs that are high beta and safe havens and the markets is moving in an opposite direction of market fear. So I think that's the only concern is that we just don't know when shit stirs the pot because we want to take advantage of those geopolitical tensions more than because the tensions that's where we're going to get those 100 pip moves. So yeah, it's a tough one, man. It's been tough. You know, it's been real tough. The only way you can hold a trade longer is if you just have a higher stop loss. That's just the only way, you know, and then you're just taking a shot that it continues. But if you break even, you're better off just taking the whole trade, like to tell you the truth, because there's still a higher chance you may get stopped out of break even anyway. So either you have a higher stop loss and just let it ride because this does support weaker euro overall, and just use proper risk management. But you never know. Like if this continues to push lower, like shit, it's just extra. If you have it at break even, it's just extra. Yeah, if you look to re-enter, I would say if AUD continues to gain strength in the currency monitor, then I would probably say give it a shot. But wait for an order block, like your technical entries. Wait for like an order block on like the 5 minute and lower, and then look for a reentry because like euro has been pushing weaker this whole time. So if we see that, like, because usually after the press conference, we could see more euro weakness because the markets now is going to digest what's happening, and then we could probably see more euro weakness as well. You know, yeah. But yeah, good job today, guys. Yeah, euro was an easy one. Dollar gained strength right away. The only like this is why it's good to see how gold and like look at how the markets reacted. You know, so I think that's just important. And it's not to say that gold won't react later on at it, like because if dollar recovers, right, that will probably support gold buys. You know, just because we're seeing dollar recover, so that would probably definitely help those gold buyers, right? But you know, I think this was the execution. We took advantage of that. The goal is not to give your money back. Wait for the next opportunity to execute in the trade. All right, guys. So if you won and it was like, damn, that shit was easy, it was quick, let it be easy and quick. USD JPY, that's a tough one. Because dollar technically is still above structure. And if like the only way I could see that this would be a dud if it breaks below 149,400. I would have a stop loss below there. But it's very tough to see. Like, I don't like how yen reacted. So yeah, whoever took Euro USD JPY, that it sucked. That was a tough one. It's just picking the wrong pair, you know. And sometimes that happens. Like sometimes it happens. Sometimes it happens. You know, again, it happens sometimes. But you just have to under. Yeah, sometimes it happens. Yeah, today I was just like, yeah, it was kind of weird to see how JPY reacted. Can't really. It's actually following the dollar and the yields. So that kind of like either shows me that the dollar may recover or the yen is going to react later on. One more question. Where do you see euro? Like, I mean, it just depends on technicals now. Like euro, yeah, euro is still pushing lower. It's a good sign. Um, because now, like, you just have to look to the left where this is a good zone that we could hit. Like right here, I could see this being a good target. 16400 could be a good target. Yeah, like yeah, 1.61, yeah, 1.61. That could be a good target. I would say that zone, like just that zone could be a good target. Yeah, like those could be good targets. Like, yeah, like try to let this one run. Let's see what happens for the rest of the week. Let this one run. Let this one breathe. But again, you know, anything could happen. But she was very dovish. You know, it was about the growth of the economy was what was waiting for because she was already downplaying inflation. But once she started saying that shit about the growth of the economy, that's where the market was like, oh yeah, this is her tip in her hand, giving us a direction. So yeah, euro's weaker. All right, guys. So yeah, yeah, fucking awesome. Very good week so far. So now just don't give the money back to the markets. Like if you're gonna wait later in the session for a trade, just remember what's going on. But just still try to be a little more patient when it comes to what's going on with the dollar and equities. I think that's going to be more of a little challenge for today. But today's data supports stronger dollar and it supports stronger growth. So I think that's just how the markets should dissect the information for today, which should still be dollar strength, which should still be equity upside. But I could see equities recovering from a profit taking move. So I would just be cautious with that. All right, guys, have a good one. And I'll see you guys in the chats and I'll update everybody. Yeah, good job, Zach. Amazing.